total global financial assets in the world today are 900 trillion US dollar equivalent, okay? Which includes global financial debt, 400 trillion US dollars. Right below that, 300 trillion of global real estate. Below that, 100 trillion of global equity. And then there's a catch-all bucket of another 100 trillion, which includes your gold, which is anywhere between $5 and $10 trillion. It includes commodities. It includes all currencies. So adding it up, 400 plus 300 plus 100 plus 100, that's your $900 trillion of total global financial assets, okay? That's your addressable market for Bitcoin, measured in US dollar fiat today. Let's play some games. What if Bitcoin gets a 5% market share? 5% of 900 trillion, 45, do the math, 45 trillion, right? What's 45 trillion divided by the fixed supply of Bitcoin of 21 million?
In a world where most currencies are losing value daily, many still wonder if Bitcoin can be the solution. And we know the answer is not obvious for most people because they don't have the knowledge or experience in financial markets to evaluate the opportunity properly and what's happening. That's why we bring these daily crypto videos showing what most experts in these fields think about the current financial crisis we're living in and their predictions for the future. In today's video, we will have Greg Foss, Bitcoin strategist and partner at Bitcoin Opportunity Fund, explain why he believes buying Bitcoin now at current prices is still a cheap opportunity to 10 or 20x your investment soon. Not only that, but with 30 years of experience in financial markets, he also believes that Bitcoin will be valued differently. For example, Greg believes Bitcoin will be the unit of measure for energy instead of US dollars, which will change everything for this asset. So pay close attention. This interview will probably expand your mind to the possibilities. Don't forget to share it on your social media, as it will also help educate your friends and family who haven't heard of Bitcoin or crypto before.
I have a trading expression, right? You give a target, but not a time. Because if you do both, you'll be wrong on one, right? So,
or not.
Well, you could, but I would just say it's a process, okay? So, you know, you look at my price target on Bitcoin and then people ultimately ask, well, when's it going to get there? And I say, I can't give both. I can give a target, but not a time. I measure the target in today's dollars. And then by the time it gets there, we do the adjustment as to what it would be in today's dollars. The same thing. Why does it get to that price? Well, there's global macro events that include these types of events. I don't know when they'll happen. I'm just very comfortable projecting that they will happen. It's just the law of probabilities. I mean, it's the same sort of thing. If gold has a price because people view it differently. They view it as a store of value. They could view it for industrial use. They could view it for all sorts of different things. There's not just jewelry. That's fair. There's not one single model that comes up with that. There you go. Not large, but is potential. There are many different models that contribute to a market price. And that market price is, you can't argue with it, right? That is the price set by the market at any given time. How did people come up with that valuation? Some people use this model, some people use this model. It doesn't matter. It trades for this price because of a supply demand at that price.
So what's Greg's Bitcoin price prediction?
In current values, using credit default swaps and using my assumptions, easily over 400,000 US dollars per Bitcoin in today's markets. You're getting insurance that should be valued over $400,000 for less than 1/10 of the price. It's trading under $30,000. Pretty good deal. Pretty good deal. I'm not sure, but that's why I purchased Bitcoin. Bitcoin is extremely cheap on a number of metrics. And I'm comfortable buying it at 30,000 because I think that it is so darn cheap. And, you know, I use one model that uses credit default swaps. I can use another model that values Bitcoin at over $2 million in today's dollars. Total global financial assets in the world today are 900 trillion US dollar equivalent, okay? Which includes global financial debt, 400 trillion US dollars. Right below that, 300 trillion of global real estate. Below that, 100 trillion of global equity. And then there's a catch-all bucket of another 100 trillion, which includes your gold, which is anywhere between $5 and $10 trillion. It includes commodities. It includes all currencies. So adding it up, 400 plus 300 plus 100 plus 100, that's your $900 trillion of total global financial assets, okay? That's your addressable market for Bitcoin, measured in US dollar fiat today. Let's play some games. What if Bitcoin gets a 5% market share? 5% of 900 trillion, 45, do the math, 45 trillion, right? What's 45 trillion divided by the fixed supply of Bitcoin of 21 million? Over 2 million US dollars per Bitcoin in today's dollars. I don't care about anything else. I own Bitcoin for the next 20 years. If you ask me how it gets to my price target, I don't care.
But how does Bitcoin get to the 5% market cap?
Because it's the world's best store of value based on math and code that cannot be manipulated by any centralized authority.
With central bank digital currencies coming soon to the table, most experts say these will be another way for the government to stop using Bitcoin and other crypto by giving people their solution. Some argue that this is just another way for the government to regain control, but according to Greg, it will help increase Bitcoin adoption, and this is why.
Because if you have a digital currency on your phone, the government-issued digital currency, the extension to buy a Bitcoin digital asset using a wallet that already has digital currencies in it, I'm restricting you from doing this. What do kids generally do? They go out, they do what you're trying to restrict them to do. They end up experimenting with it more.
What's Greg's portfolio distribution right now?
About 40.
And the rest is the...
I own real estate. I own stocks. I own a little bit of bonds right now as a trade, not as a long-term investment.
Okay.
But I'm a risk manager, and I
believe you own some gold?
100% I own gold.
Okay.
I love gold. It's just that Bitcoin is better.
Greg Foss also has a thesis on how Bitcoin will be used to measure the worth of other assets like oil. Instead of being valued in US dollars like it currently is, one Bitcoin will always be worth one Bitcoin, and people will trade it differently. For example, how many barrels of oil can I buy with one Bitcoin? This is his explanation of that and how that will also affect Bitcoin's prices.
Let's start with the fact that I'm an engineer. And the first law of thermodynamics is basically that energy cannot be created nor destroyed. So it's the law of conservation of energy. So the big picture to me would be it makes sense to have natural resource energy priced in digital energy. I think of Bitcoin as digital energy. And so from the law of conservation of energy, that makes sense. You keep the loop closed. But let's start with what the petrodollar is, which is a very strategic advantage for the United States. So it's not surprising that some of the not so friendly nations of the United States are looking to destabilize the petrodollar. What does it mean when oil and natural gas are priced in US dollars? It means essentially that the USA can print energy. Think of that strategic advantage that has, and the flip side, the negative effects it has for a country like Russia. Russia is selling its valuable natural resource energy for US dollars that are debasing, firstly, but also that can be frozen. US Treasury assets get frozen and whatnot. But they're not the only nation that would be subject to those challenges. If we bring it back to the idea, and you did mention this, that Bitcoin is priced in fiat. Fiat is just a measuring stick. Your house is priced in fiat. The value of your house hasn't really changed, in that shelter still is equally valuable today as it was 30 years ago. The only thing that's happened is the price of that house measured in US dollars has increased because the unit of account, which is the US dollar, has decreased in value on a relative basis. So when we say that Bitcoin is priced in fiat, that's just a measuring stick. But I like to say 1 Bitcoin equals 1 Bitcoin. You know, there will be a time when fiat is actually priced in Bitcoin, not the flip side. And you have to understand that. Energy will be the most important step. That will be the big event that I believe causes, you know, people to realize why Bitcoin is so darn cheap at a price that it's currently trading at today relative to where it could go, priced in fiat. Now, again, pricing something in fiat is like pricing something in a ruler or measuring something in a ruler that continuously changes, right? I mean, the government's changed the length of a ruler. So you can't rely on that unit of account. Ultimately, I believe there will be a time when everything else is priced in Bitcoin, and that is the truest measure of account, Bitcoin. If we go back to the principle that 1 Bitcoin equals 1 Bitcoin, then we don't get confused with, you know, the relative trading pair. We call it a trading pair. So, you know, much like the Canadian dollar trades as a trading pair against the US dollar, the Bitcoin trades as a trading pair against the US dollar. That trading pair is on its way out, in my opinion. And that's why if you start with how about this? What is Bitcoin worth in a barrel of oil? Okay, so you have a volume of oil. How much of that barrel of oil does 1 Bitcoin buy? You've taken the US dollar out of the equation altogether. Does one Bitcoin equal, so you know, you could do the math in your head, $30,000 US per Bitcoin, 1 barrel of oil equals, you know, we're running with it, but that will change over time so that you measure Bitcoin in barrels of oil, not in fiat.
Want more Greg Foss content? Please help us get 100 likes on this video, and we will bring more valuable content like this to help you profit more in your crypto journey. Also, please don't forget to subscribe so you don't miss any uploads. Thanks.